What you're seeing on the screen now is not an accurate reflection of the wicked rally. Buy the dip. They had us down 40, 50 handles. Now we're up 13. Impressive rally. Of course, we'll talk about Nvidia. We got some big winners and some big losers. Besides that, Salesforce looking good. Dollar Tree. Dollar General. Holy smokes. So a lot of earnings to cover. If you don't believe in analysts helping a stock, well, we're gonna prove you wrong on that one with Nvidia. It's Thursday. We got a big old show lined up for you. Pre-market begins right now.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, good morning, traders, investors. We'll get a quick rundown. S&P's up 12 and a quarter. As I said, that is 60 handles off that pre-market low. The buck is up a dime here at 101.10. TLT flat 97.85. Crude in the green by 42 cents, 74.94. Gold, looking at that quad top, up 14 bucks at 25.50, 160. Silver can't hang in the 30 handle. It's up 23 cents, 29.87. Bitcoin bouncing back. That's up nearly $1,600 at 60,500. Triple D, on days like this and nights like this, I think about you shutting down at 8 a.m. and then reopening your computer. Well, I know you're looking at quotes in the middle of the night and stuff, but holy mackerel.
Oh, yeah. It
What a
all
rally.
changed. I went to bed pretty early. I was tired from trading early the night before. I went to bed just before 10 o'clock, and then I woke up around 5, and I checked my phone, and I was like, are you kidding me? Are you kidding me? We are up and up pretty big. I'm like, what happened? When I was sleeping, AB, come on in. I text you. I'm like, what happened? I'm like, we were down 50 handles when I closed up shop for the night at 9:30, and I come in and we're up 20. So we get a 70-point rally overnight. I'm like, what's up? Joel's like, I don't know. Just buy the dip. Buy the dip comes in. AB, were you up all night buying the dip? Were you out there on your Robinhood account just buying and lifting offers hand over fist? Is this the AB rally?
I wish. No, I would have been buying the dip had I been up all night. I mean, let's get into Nvidia's earnings because they were pretty decent. I think a lot of people expected the bar was a little high, and we talked about that on pre-market prep. That what if Nvidia kind of goes sideways, right? Everyone buying puts, everyone buying
Yep.
calls gets crushed by that. The implied volatility and whatnot, the premium that you're paying for those options. So when Nvidia reported, I don't know if you guys saw this, but they were having watch parties and stuff in New York City. People were treating it like it was a football game. But the company, did you guys see that?
No, it's funny.
Oh, here, I'll pull up.
I wish I would have seen that because I would have shorted the straddle for sure on that.
That's what people were saying. They were like, "What?"
Yeah, the option rate or the option buyers are just like, ugh.
Wah,
The
wah,
the option writers are like, yeah, baby.
All right. So
Watch party.
Yeah, I'll pull that up.
Let's see it. Let's see it. Who was having a watch party?
He's bringing that up. While he's bringing that up, we'll let him find that, unless he finds it in the next 2 seconds, because I'm going to take over because we don't like.
I got it.
You got it?
Yeah.
Go.
Yeah, I'll give the numbers too here right after this. So this is just on my Twitter. So, look at this. They're at a bar. Let me see if I can get that.
I just want to get your thoughts on how much bonus you put on the readers we've gotten from TSMC comments on improved AI demand.
Oh my gosh.
That's great. Wow, that's great.
Yeah, so people were treating this. It was a big deal. So Nvidia's earnings came out. Let's give the numbers real quick, and then we'll talk about the reaction because we know that's what really matters is the reaction to this report, not necessarily the numbers itself. EPS for Nvidia came in at 68 cents, beat the 64-cent estimate. Sales came in at $30.04 billion, beat the $28.68 billion estimate. The company sees Q3 revenue, that's next quarter for Nvidia, coming in at $32.5 billion, which was against the $31.77 billion. Some other numbers that I think we should care about. So data center revenue was $26.3 billion, up 16% from the previous quarter, up 154% year over year. They talked about a $50 billion buyback. I don't know. I mean, everything, if you're just an investor and holder in this company, I think you're happy with this report. If you're trading it to the long side, you weren't happy with the reaction because the stock dipped down to, Joel, what the lows were?
115.01.
115 on the dot. 115 on the dot.
Always
and
those
then,
full numbers.
Yeah, and I guess you had some buyers coming in back there because the stock came back up to around 120, and then it kind of stalled out there, and then went all the way back up to 125. So the reaction was kind of all over the place here. I think, I don't know what Nvidia would have had to said for the stock to really rip on this report, because again, all the numbers beat expectations. I guess the bar was just a little too high here.
Lots to unpack and lots of repercussions. One thing is Wall Street will not let Nvidia go down. And if you really want to know why we're rallying here overnight with Nvidia, it is buy the dip mentality. Lots of people buy the dip. I just want to go through Walter Bloomberg, nice summary here on Twitter.
Can you show it, Dennis?
Analyst action from last night. You can show it if you want. It's a good time. You can just bring up the Pro too if you want. It'll be in the Pro, all these ratings too. We just didn't summarize it, I don't think, yet. But Morgan Stanley raises price target to 150 from 144. Bernstein raises price target to 155 from 130. Wells Fargo raises price target. Goldman Sachs raises price target. Mizuho raises price target. Bank of America Securities raises price target. Raymond James raises price target. JP Morgan raises price target. Needham raises price target. Baird raises price target. New Street Research raises price target. This is analyst-driven buying the dip. Every single analyst coming out this morning, there is 5, 10, 12 of them, all raising their price targets. They can't put buy ratings because they've all had buy ratings. I believe, and you might want to verify this, but I believe there is not one analyst on the street with a sell rating on Nvidia. Not a one. So, I mean, Wall Street just absolutely loves this stock. It's the darling. It sells, people coming in, you're trying to sell new ETFs, or you're trying to sell this, you're selling that. Nvidia AI. They love this stock. They need this stock. They can't afford this stock to go down. So, I mean, they come in defending, defend. Nvidia, nice rally off the lows. Thank you very much, Mr. Analysts.
Well off the pre-market low. I mean, I'm just gonna wait for whoever was had their orders out at 130. I'm just gonna keep an eye on that. That is just such a big level. Someone got it totally right, or a group of institutions, large traders, person out there, whether they just did it for a trade and bought the dip and brought it in at the 115 area remains to be seen. But if you're a long-term investor in Nvidia, I don't care what any of these people say, this thing is gotta clear 130. If it's 130, all those price targets are great. Pick your poison here between 120, 112 and 130. But it's there. It's standing out. And it never got a pop above that. It went straight down off the report. I thought maybe that number would come into play. And then if you just want to be patient and you don't care about the 130 pre-market high, pre-market anything, let's watch today, the close from yesterday, 25.61. You didn't get a $10 rally off that pre-market low, but you didn't get unchanged. So we'll reserve our total judgment, whether up, down, sideways. Sideways looks like the call right now. Let's see if they want to take this thing green today and take it back up. I mean, it's going to take a lot of stock. It wouldn't surprise me
if it goes green. And, to everyone's point, we made this point a few days ago, when we were talking about Nvidia, and I was like, what would punish the maximum amount of participants? Yep. It went sideways. Yep. We said it 3 days ago when we were analyzing the options. I mean, you got all those options going out the board. Lots of people taking positions on calls. Some people taking positions on puts. This thing closes on the week at 125. They're
Oh.
all worthless. That's where the market makers make the maximum amount of money. That's where they'll want to pin it to. And sometimes it's just the natural pinning action that happens. But that's the level that it probably wants to go to, to close out the week at 125. Now, other things can happen. We're going to get some more reports tonight. But, this was the big one. Now it's the aftermath. And the aftermath right now is the analysts are like, no, we're buying the dip. Because blindly buying the dip works. It does overnight. Holy cow. Just close your eyes and buy the dip on any tech stock last night and make money. And the real driver, to Spinner's point here, Citigroup note on Apple. Apple is ripping this morning. So when you got Nvidia down, they got to be buying something else. And Citigroup comes out with Apple as their top AI pick here. Stock is trading up $3. So Apple, which actually has been holding on fairly well, Joe. We get a sell-off yesterday.
It has.
Apple really not having any of it. We get a sell-off a few leaving last week a little bit. Apple really not having any of it. Apple's been holding on pretty well. Mm-hmm. Now, all of a sudden, Apple is breaking out to new highs. New highs on the move. Not new all-time highs, but new highs on the move. 129.86. We are kissing the new highs on the move. The Qs are significantly off where they were, not significantly, but we were 484. So you're talking about 12 points off on the Qs.
Yep.
Where Apple, same time frame, is now right up bumping against the highs. They're going to talk about this stock on CNBC. They're going to probably have the analyst, and they're going to be talking about it in the media. And does this bring us up and kick us up through 230? They want to kickstart something? Probably. So, don't look further than Apple as, a driver for today as well, even though it wasn't on the earnings call.
Look at Microsoft. Look at how far Microsoft is off its all-time high, right? Ways off. The Googster, boom, a ways off. Amazon, a ways off. Meta's been hanging up there a little bit. That's more in the Apple boat. But, the top pick, Citi, I'm not chasing it up 345 at 229.94. Someone just made a great point here. You got a gap fill. Oh, wait, that gap fill is not until 232.33. Oh, boy. I don't know. I'll just look at this day. I'll look at this 230.44 high. And that was July 18th. And then July 17th was 231.46. So look at that. If you get back for Apple here. On Citi moving Apple like this, it's a kind of a weird day, but not chasing and looking at potential resistance.
There you go. Well, obviously Nvidia and the rest of the big tech stocks, that will be a big talking point on CNBC today. We'll see if that rally continues at the buy the dip. We had some other earnings reports to break down as well. Joel, you mentioned it off the hop. Dollar General, DG, came in. Let's see. Let's get the actual numbers here. EPS came in at $1.70, missed the $1.78 estimate. Sales came in at $10.21 billion, missed the $10.36 billion. Lowered the fiscal year 2024 outlook, saying, so it lowered its guidance, saying that the customer is what was the exact words they said? They were just talked about a constrained customer, which is interesting because you would think constrained customers would go to Dollar General. We've seen in past times that when we do go into a recession, that the dollar stores actually do pretty well comparatively to other stores. So interesting to see Dollar General get whacked so hard here, trading down 25%, $30 here. So anyone buying it as a defensive name here, thinking that we're going to head to a recession, people are going to have to shop at dollar stores. Not doing well today. This stock is it at all-time lows, Joel?
It's
no.
Decades, though. You're going back now. How far are we going back?
2018.
2018. Not decades, but eight years.
Yeah.
7-8 years here. It's 2017 pricing right now. This stock has been an epic disaster. It had a little bit of a run. 2023, middle of it, everything, and now it's just a disaster here once again. I gotta think these dollar stores, I'm going to continue to say it, we've said it, margins have got to be getting squeezed here. I know Dollar General, it's like the little corner store in all these small little towns, but they got to be getting squeezed to a certain extent here. Labor costs going up, inflation did happen. I got to think all that comes into play. Dollar Tree is obviously your classic dollar store where you're trying to keep prices at $1 and they couldn't, they had to break the buck. So they're not even dollar stores anymore. It's tough business. It's tough business when you get inflation. Inflation's killed these businesses.
Look at Five Below up $3. Okay. All right. Let's go to the price action here. Multi-year lows. If you want to step, oh, Dollar Tree just spiked down to, oh, that's Dollar Tree. Let's go to DG. I'll just go to, I got to go to monthly support here, and I'll try and find two levels in the same area. And I don't think we're going to see it today, but back in May and June of 2018, you had a double bottom at 87. So if you want to try and ride it out for that, it's already down $30. Don't think you're going to see that today, but you got to let the dust settle. I know it has nothing to do with it, but like Pin Duo, I mean, it just, you're just stepping in front of a freight train here with these
The
things.
stocks that go weak get weak. They just continue to get weaker. I mean, the Pinduoduo disappoints. And it wasn't even that bad, but it's just a matter. It's a China stock, disappointed a little bit. It was the conference call comments talking about competition and talking about, not a rosy outlook. And they're done. You're done. You cannot be a China stock and talk like that. You cannot. And it continues to go down here too. Chat's taking over they're going to take over the take over the show for a little bit here. They want to talk SMCI yesterday.
Oh.
I want to talk SMCI here too, because this is unbelievable what happened. I don't know if I've ever seen this before. So SMCI obviously has the Hindenburg thing the day before, and you can see it on the chart. Leave that chart up on the left. Hindenburg comes out with the accusations that they basically were saying there's a chance that they're cooking the books. And the dip got bought. The dip got bought. They don't believe it. They weren't believing these activist shorts. They're not believing, call them activist shorts, but they're not believing the short sellers on this. And then after the show ended at 9 o'clock, after we were off the air, a whole can of worms gets opened. AB, if you want to grab the file, what time it came out, SMCI yesterday, I can read it for you if you don't have it, but yesterday morning, right at grabbing it at 9 o'clock, they delay their Form 10K filing. What that means is that, and the statements, and I don't have the statements right in front of me but they needed additional time to assess internal controls, and they planned basically saying they needed time to check their books. And I'm like, are you kidding me right now? You have a short seller comes out and basically accuses you of cooking the books. And then the next day you said, well, we better check that. What? Usually 99% of the time what happens is when these accusations happen that they're usually defending it and saying, no way.
The opposite.
Defending it. They didn't defend it. They basically, by filing that, said, we better look into it. I'm like, what? I'm like, are you kidding me right now? I'm like, that is the absolute worst possible thing that could happen to SMCI. Because now I'm like, are they cooking the books? Or is it all a lie? What's up? Is Hindenburg right? I'm like, and egg on my face because I didn't believe, they were saying the obvious, but they come out with that 10K. It's like, oh my God, they might be right. Hindenburg might actually be right here. And they might be cooking the books. We don't know anything yet. We just know they delayed. And that's kind of telling me that they're looking into it. I'm like, holy crap. That is the worst possible news
That's
you could
the
possibly
worst news.
get as a shareholder. And they hammered the stock. I sold the majority of what I had left in the position of SMCI on the news in the hole because I ain't messing with that. I'm like, if you can't believe the numbers, if they're possibly cooking the books, you can't own the stock. So I'm like, I took a big loss on it. Happens. Got to cut your losers. Take your loss and run. And that's why I said, like, people were asking me, are you buying the dip? And I tweeted out yesterday morning, like before the market, I am not buying this dip. Definitely not buying this dip. And then I'm looking, and I got to sell this? And I'm like, I think I got to sell. I kept a little piece, but I sold the bulk of the position yesterday at a big loss on the back half. Obviously, I made a lot of money on the run up earlier on, but I had rebought at 700 and terrible buy, buying the dip, trying to be a hero, catch a falling knife. Oh, I sold at 950, so I'll rebuy at 700. Well, no, getting punished severely for that. So what do you do? I mean, what do you do when you got a short seller comes out, accuses them of cooking the books, and then the next day they delay their 10K filing. It's telling you that they're looking into it. I'm like, that is not a defense. It's the worst possible thing they could have did. My jaw hit the desk when I saw that. I was like, I couldn't believe it. Hindenburg, props. Props at least right now, because they're on to something. Crazy.
Wow. And the stock's moving down again this morning. It's down another, $20, 4.5%. I mean,
that's off Nvidia. That's off Nvidia for sure, because Nvidia is down still 3.83%. But AB, I mean, what are your thoughts here? I mean, you see these accusations happen all the time. Fuzzy Panda, GL. It seems nothing happened of it. Usually the next day or that night, the company comes out and defends it.
Yep.
They don't come out and say, "Oh, we better look into it." And that's what the filing says. It says, "We better look into this." I'm like, holy crap, Hindenburg, props to that short seller with that report, because they may end up being right here.
Yeah, I mean, so if you go back to when SMCI was going on that parabolic run back in, January of 2024, I was looking at it and I was like, all right, this run's, overdone, but that SMCI actually has some fundamental growth, some fundamentals to back up the move, rather than, maybe an AMC or a GameStop or something like that was just moving because it was a meme stock. Now that kind of goes out the window if some of those numbers aren't as legit, but I think we'll need some time for the dust to settle to see. I still think SMCI, I mean, from what I know about the company, I'm not an expert in the semiconductor space. It still seems like an important company in
data centers.
Data centers and the rise of AI, and if growing demand. I don't think SMCI is going to zero or a dead company, but if I were gonna be looking at buying this right now, buying the dip, I'd want to wait and see a little bit more about some of these obvious issues the company's having. But I wouldn't, I'd be lying if I said I wasn't interested in potentially buying the dip down here, just because, like I said, I think that this company will over time still be an important player in this space. Today though, I'm probably not going out and touching it.
No, I don't think you can. And we don't know anything for certain here yet. And Gabe making a fantastic point in the chat. I just want to read what he just said because it summarizes it very well. Man, this chat's going too fast. I can't see it now. Gabe, Hindenburg might, of course, be completely wrong with SMCI just ensuring that everything is in place to avoid egg on their face. Maybe they're just checking just to make sure they've dotted the I's and crossed the T's. And then the stock will probably have a rally if that is the case. But right now, we don't know that. I'm like, why do they got to check that they're dotting the I's and crossing the T's? This is what accounting is for. The I's are supposed to be dotted, and the T's are supposed to be crossed. I mean, before you give these reports. So, I mean, obviously some type of accounting issues that they want to go back and check. I mean, maybe it's nothing. Maybe it is a nothing burger. We don't know. But we don't know that it's not nothing. And that's why yesterday I'm looking at this and I'm like, I don't want to be in something that I don't know. I don't know if there's potentially accounting issues here. Because what Kramer says, one thing I agree with Kramer, 110% all day. Accounting issues equals sell. You get accounting issues in the stock and you can't believe the numbers. You sell it the next day. That's my opinion. I've always been to the same thing. I've been caught in stocks like that before. They start talking about accounting issues. I take the loss and run, because once you can't believe the books, you can't believe anything. All analysis, all fundamental analysis goes out the window when you can't believe the books.
I had just going back to my oldie days, just going back to fundamentals. One of the first things that I learned about stocks is when there's news and it's related to accounting, okay, that is the worst kind of warning signal that you can get. CEOs, having affairs, whatever stuff happens when it comes to accounting. And this is talked about before with SMCI, so it's not new. It's not new at all. I mean, this news has been out there. That is, besides the crazy price action, besides everything that's going on, that is the number one thing, accounting woes. Then when you're accused of it, that is, you put it, great. Then you come out and you say, oh, we're not sure. That's absolutely horrible. I mean, that's the worst management. That is, it's just beyond belief.
Unfathomable. That was unfathomable. And you know what? There will be class action suits probably
Oh,
coming at
yeah.
SMCI for this.
Yep.
Because I feel like I got screwed, especially if there is. I mean, imagine if there is accounting issues. And we don't know. Maybe they come out and they say, no, we're good. Everything is good. We've been audited independently. Everything is good. Our numbers are good. Then the stock probably gets a significant pop if that's the case. But if they've got to come out and adjust anything, adjust previous quarter, anything like that, man, there is going to be so many people that are going to be like, well, what can we believe on you now? You know, you're not doing the accounting. I mean, count up the numbers, dot the I's, cross the T's. So anyways, accusation and then the delay. That's somebody, because people are saying, well, they accused GL and GL came back. GL didn't delay their 10K filing the next day. They said this is all BS. And you know what? It may have been BS. Maybe it wasn't BS, but nothing has really come of GL. You know, maybe something does come, but the stock has doubled from where, you know, Fuzzy Panda took it down. But I'm going to say Hindenburg, you know, give them props, man, because obviously they stayed a lot of stuff that we knew they had accounting issues back in 2018 or 2019. We knew that this had happened before. And, you know, and they obviously stated it all. You just think that they'd cleaned it all up. And maybe they haven't. So that's what Hindenburg was basically saying. And the delay of the 10K says maybe they haven't. That is an issue, a major
All
issue.
right. I hate to shift gears here,
Yeah,
but
we got GDP coming.
we do have some 8:30 numbers here, and
Going
we got a
wide.
whole
Thank you,
host.
chat.
Yeah, chat. What a considerate chat today. As opposed to other days. GDP second quarter estimates coming out. Initial jobless claims. We're all worried about that, and then retail wholesale inventories is coming out. All at 8:30. Pending home sales is not till 10 o'clock here. So all eyes on the numbers here. Dennis is going to go wide. You got some previews for us, AB, here?
Yeah, so we're getting, like you said, a slew of different numbers. GDP second revision coming out. We're looking for 2.8%. We have initial jobless claims. We're looking for 230,000. Advanced retail inventories was 0.7% previously in June. And then let's see, advanced wholesale inventories, 0.2%. So we've got a bunch of different numbers coming out. Pending home sales will come out at 10 a.m. once the market's already open. So here in a couple minutes, we'll see if the market's moving off these numbers.
Oh boy, we have already moved our average expected range for the day. Remember, we got over 100, and I'm like, we need to calm down. We need to calm down. We came all the way back down. Yesterday shook things up a little bit. You're in a thin area here. Yesterday's high, you got a double top up top. So if they like it, they really like it, they can take it to 56.50. Another 23 handles. That would be just a really impressive move. If somehow they don't like it, you can look at the close at 10 and a quarter, but that's hardly a relevant number with,
I
the
think the
times
dip gets bought. I
yeah.
think if there's a dip, you've got people caught from last night big time. You
Oh,
got to
yeah.
think of the trader. The short-term trader drives short-term price action. A lot of people selling stocks last night are caught. A lot of traders caught on the wrong side. Short the market, short, stocks, because Nvidia was getting crushed, and then you get this overnight rip and roar and rally. So right now they're like, please come in, please come in, please come in. You get a dip, it gets bought. Wouldn't surprise me if it ripped too. So I think bulls may win here either way. It may dip. I'll be buying a dip. I'm going to go off in the background here, but I'll be buying dips.
I'll be selling a rip. I don't know where to buy this market. I know where the resistance is, but here we go. We got the quiet, the algo jumpers here. They're hopping on it early here. They're liking it. We're going. Ooh, good numbers. Make a new pre-market high at 34.50. Still some trepidation in the market. We are 34.50. I don't have anything there for you. The numbers should be coming across the wire here. So the bid has been maintained, has not been much of a dip. It's been a rep in a thin area of resistance here. Still bid, still strong bid. The numbers are out, AB. Help me out here. It looks like the street likes them so far.
Yeah, let me go ahead. I'm still waiting for these numbers to come through on my wire. Core PCE. How do they do this? The core PCE comes out today, and then tomorrow we get the rest. But 2.8% versus 2.9% estimated. GDP quarter over quarter, 3% versus 2.8% estimated. So that came in hotter than expected. Initial jobless claims, 231,000 versus 232,000. So that was pretty much in line. Retail inventories, excluding auto for July, came in at 0.5%, 0.3% prior. So all in all, looks like the numbers were pretty good. You had the core PCE coming in slightly below expectations, and you had the GDP coming in above expectations. So the economy seems to still be doing pretty well. What was the final move off that, Joel?
We're still trading in the green. Let's go to the TLT here. That's trading down a little bit. Let's get the pre-market. It's a rally. We're going contra here. The bond traders are not liking this just because. Do we need those rate cuts? I know we're getting the rate cuts, folks. I know they're doing it, but this is just showing that, well, the economy's still doing okay. TLT going in the red here, down 18 cents. So that got it, but they're liking stocks on this. Everything is all fine and dandy. We're not going into a recession. So you still got a bid. You had a bid last night. You're holding the bid. You're making new highs on the session. Why the heck not try for that double top at 56.50? That's about it on the price action. I'm looking Nvidia of my top components. That's the only one still remaining in the red. So you have a rally. I would call it, not a rip your face off rally that you had last night, but a little bit of a muted rally here in the pre-market off those numbers.
All right, let's see.
I'm here.
Oh, yeah, it was kind of a nothing burger, huh, didn't it?
Yeah, we didn't really. We bounced a little bit up. You got underneath demand here now, man. It's going to be hard for this market to go down. You got everybody caught short from last night. Short-term action. It's going to be hard. And I know people are coming in saying, oh, gift, rally, dumb overnight. We're just going to sell everything. I don't think so. I think we're going to have a continuation here. I think I'm like bullish stocks here. Even though we just ran up, 70 handles from the low, I think on any weakness, I'm trying to buy stocks.
All right. Well, let's see. Should we do another earnings report before we get to our?
Yeah. Well, let's go with CrowdStrike. Can we do CrowdStrike from last night?
Yeah, let's do CrowdStrike.
That's where I was gonna go. So CrowdStrike, trading slightly lower after the report. The EPS came in at $1.04, beat by 7 cents. Revenue of $963 million, beat by $5 million. Tweaks guidance after the outage, and I believe so. I don't have the exact headlines with me, but on the call, what do they say about the actual outage there? And if are they? I think they're retaining most of their customers. I mean, the stock's not down too much after
it was
all
up.
Of that. Yeah,
it was up.
And
it was up significantly. It was down in the initial print, and then it rallied significantly. And then it leaked it on the conference call. They must have said something because it did come back in. So I wasn't listening to the call. There was a whole bunch. I believe that the guidance was light. So I believe the guidance was light. I believe that was why it came back down on the call. But, where we're at here, obviously you don't want nosebleed valuations with light guidance. CrowdStrike has, come in a little bit there. What were the actual numbers? Give us the actual numbers there again, AB.
Yeah, EPS came in at $1.04, beat by 7 cents. Revenue of $963 million, beat by $5.5 million. Let's see, subscription revenues rise 33%. Guidance, let's see, the EPS guidance was 361 to 365 versus the 388 estimate. So that did come in lighter. Revenue guidance at 3.89 to 3.9 billion versus $3.95 billion estimate. So that was light as well. So when you have that lighter guidance and some uncertainty there, it's not surprising to see the stock moving down. I think this thing just got a little bit oversold. I mean, because you were already down more than 20% heading into the report. But it is still well off those lows. It got below $200 a couple weeks ago and is now trading around $260 even after the report.
This is a really tough call. Spencer saying it was on the call. Elon in the chat also saying management guide down, and they cited the data outage. So they did guide down because of this, and that is why the stock turned to red. And really, Joel, from last night, this is not participating much in the rally. In the overnight rally, because you can see the initial hit, we did bounce off, but we hadn't had that already, that, bounce back. It's a really tough call. It's a curveball, could
It
go.
is.
This looks like they're. This is a tough pitch to hit.
Hey, watch your bids here, Dennis. It looks like they're a little bit
Leaking a little bit.
more. No,
Come on in. I
yeah.
want to buy some
You know what?
stock.
You just said, yeah. Well, just be patient here. Don't be a hero.
Maybe you
up
get a
here.
flat. Maybe get this S&P.
Yeah,
comes down flat. I don't think we're
there's
going to
nothing
down
in
60,
here.
70
There's
handles again.
nothing in here. I'm telling you, there's nothing in here. I wish they would have taken it up another 10,
Come
10
in a little
15
bit.
now.
Come
Yeah,
in.
it's coming
Come
in. They don't
in.
love this. They
I
come
got-
to Papa.
I got bids down beneath 20 handles below.
Let's go to our
Triple B's
guest
buying.
because this CrowdStrike.
15 handles below.
This is a crude ball.
10 handles below.
Yeah,
All right, our special guest of the day, we got Michael Katz joining us back from Trade the Pool. We had Michael on was it a week ago?
Yeah.
I don't remember I can't remember the dates anymore. But
Last week.
Yeah, last week. Let's bring Michael back on Pre-Market Prep. All right, Michael Katz, morning. Welcome back to Pre-Market Prep.
Morning. How's it going, everybody?
Good. So I'm sure you guys are busy right now. You with a lot of your clients and whatnot, trading Nvidia's earnings.
Yeah.
What's new with you since the last time we had you on the show?
I mean, a lot is going on. Obviously, the market is crazy. And today I came to talk about the market. Last time, we talked about Trade the Pool, of course, but always keen into talk about trading because that's what we do every day. And for me, it's still excited from the first day. You always like to trade, even if you become the CEO of a prop firm, you still want to trade and get rid of all the meetings.
It's an addiction. It's an addiction, Michael. Like I'm addicted to trading too. Like some people are addicted to alcohol or smoking. I'm addicted to trading. I have the same addiction. I don't know if I could stop.
I don't want to stop. That's the idea.
I don't want to stop.
Right?
So you're watching the Nvidia report there last night. And you see the action. Nvidia is still trading down here, but you see the S&P futures, trading down. Everything's down last night. We wake up this morning and everything is reversed and everything is green. How do you approach the market here today after this overnight rally?
Yeah, so I got to share my screen if it's possible.
Yeah, let's share it.
And let's
get Michael sharing it here.
Here we go. So I actually took those shorts. As you know, Trade the Pool is part of the Fivers, our parent company, and I took those shorts on the Nasdaq. We had a few of those right here, and 2 days ago I started to short it and covered it at the bottom. It's actually went down a little bit more, so I covered here, and it went down just a little bit more. But now, as you mentioned, Dennis, before, the rally is pretty strong, right? You can easily see that the bounce that we had here, like the pullbacks, were much weaker. Those 2 or 3 was much weaker than the one that we're getting right now. So it is look pretty strong. Obviously, we have this major resistance level at the 19,500 on NASDAQ. So I'm looking to buy the dip whenever it drop a little bit, and of course if it will break through the 19,500.
What's the time frame on that chart?
This is a 1H, an hourly.
An hourly. Oh, good.
Yeah.
Good. Okay, good.
And I would love to see a buy the dip on those levels at around 19,000. So if we will drop, if we want continue to move up above the 19,500 at around 19, I would definitely look for a buy the dip. And of course, I'm a short-term trader. For like my average hold is 8 hours. So that's what I'm looking for on NASDAQ. Of course,
so you got the buy the dip hat on here right now. So you're looking for weakness to add to stocks. And are there specific stocks that you trade, or do you trade mostly, the ETFs, or do you jumping into some specific stocks as well?
Yeah, definitely. So, of course, because I don't have a lot of time these days, so I will focus on the NASDAQ or the Qs. But whenever I get the chance, I will focus on the one that, popping on the news. So you already spoke about Dollar General. And, of course, Best Buy is also looking pretty sharp.
Yes,
not a lot of volume, but still a huge gap at the opening. So that will be interesting to try to trade today. And Affirm is also, I'm not sure if you talked about it, but AFRM. Did you cover
We
that?
have not.
No, we
have not.
haven't today. We haven't. And Affirm's had a hell of an earnings report here, and it's trading up 23% here right now. It's on our list. We haven't got to it yet here. SMCI took over for a while. Michael, what are your thoughts on Affirm?
So we're at 39 right now. So the main goal for me is to mark the major levels at around the area we're about to open. So let's say if it's 930 right now, if it will be, if we're at 930, then 39, you can easily see the pop that we had a few months ago. So that will be a rejection level in most cases. And that goes all the way back to the beginning of the year, right? All the area between 39 to 40. And we have this gap to cover. And if we'll do that at around 41.50, that could be easily a place for me to short it intraday. And of course, the next level will be the 42. We have a huge gap from February 24. So I'm looking to short it, to be honest. After this crazy move to the upside, there are plenty of resistant levels at around 39 to 42, and that will be those short areas that I would look for.
Will you go in at one chunk, or will you parcel into it? To get the momentum, or you one of these all in or all out?
No, I'm definitely scaling into my positions. This is by far the best rule that I stick to. You place an order, you fill the water, understand if it's good. Once you see that it's forming and you get in more confirmation, then adding more to the position. I don't see a reason why not to do specifically that. It works amazingly, and definitely for the guys that listen in and just started to trade, try to do that instead of risking it all.
So Michael, I mean, we're stock guys here, and most of our crowd are they trade stocks primarily, some other stuff too. But can you talk about why Trade the Pool is a good, prop trading firm for people that want to trade stocks as opposed to people that might be looking for more Forex or stuff like that?
Yeah, I mean, first of all, trading stocks is much funner than trading Forex, right? We have the news.
I think so too.
For sure.
I mean, you buy all the companies that you trade, right? You have your iPhone, you have your Nikes. It's make more sense. You understand the companies behind the scene, I guess. But besides that, I see a huge advantage that we only have 6.5 hours to trade without the pre and post market. Because when you trade in Forex or even futures, from time to time, I get traders that tell me that they woke up at 2 a.m., opened the laptop, and looked for a trade, right? So now here we have those 6.5 hours. This is the time that I'm focusing on, and this is the time that I'm looking for those opportunities. So I see a huge advantage in this one. And besides that, we have 12,000 symbols to trade. So as traders, we're looking for opportunities, right? And we've got tons of that in the market, where with Forex, you only got like 28 pairs. 8 of them are really moving. So definitely stock trading is, for me at least, much more makes sense.
Do you usually stick with the tech stocks? Is that where you're looking the most, Michael, or do you go outside tech, or you're looking to where the action is?
I mean, these days I would definitely stay with the tech and also the NASDAQ and the Qs. But take me back 5 years or even 10 years, I would jump in and out everything that moves.
And then Mike. Oh, sorry. For people that are interested in joining Trade the Pool, can you talk about, I guess, kind of just like the first steps that someone would take, the evaluation process, what that's like, and say I wanted to go do it today, what would I do?
Yeah, sure. So first of all, you go to our website, you choose the tier that you want to trade with. We have $20,000, 80, 160K, and 260. That's our max buying power. Once you choose that, you pay for the evaluation, one-time fee, and you go into the trading mode. You start to trade on a simulator account. You have 45 days to pass the evaluation. Once you reach the target that we set and you stick within the risk parameters, then you move forward to the funded phase. On the funded phase, you literally, every dollar that you make, we split the profit and you take it home. Every 14 days, you can ask to withdraw your profits. So it's pretty straightforward. Of course, you need to stay within the risk parameters. This is something a bit different that the guys that will join will see from trading your own capital. On one side, on your broker account, you don't have any rules. That could be a disadvantage or advantage, depends how you look at it. But when you trade in-house, when you trade in our capital, first, you have enough capital to trade with. There is no PDT rule. Second, you're not risking your own money, so you don't care about losing it on a good side, on a good way, because your emotions are detached. And third, we do have those risk parameters to keep you in line and not blowing up your account.
What else are we looking at on your screen here? Yeah, I know the upper right one is the daily. I believe probably the volume right below that, and then what is that? MACD? Is that what you got below that? And discuss the other chart there. What you're looking at for your analysis?
Yeah. So on my chart, I will stay as naked as possible, also at home, but also on the chart. So basically. So what I would look for is, in most cases, is reversal, so counter trend, either buy the dip or selling the top. That's 99% of my trades. And I will use a few things. First of all, the volume, of course, to find those capitulation moments when, there are bull or bear traps, to show you that there is a breakout, but it's not really real. The volume will increase dramatically. And then buyers will go in while sellers can drop their shares. So that could easily be something that we would look for on a firm, for example, today. Look for major resistance, let's say the 39 that we said, and then there will be a high volume coming in. A lot of buyers will say, this is it, it's going to 50. They will click on the buy, and once they do that, on the other side, short sellers will drop their shares or get into a position. And the second thing that I would look for is also, I really love that it's been around with me since day one, this divergence in the MACD. So for example, you see a drop, a new low coming in right here, and then you can easily see the MACD creating a higher low. Once we have that, including the volume, including the major support level, that will be a key for me to go in, scaling into the position, starting with a small chunk out of the full dollar amount of risk that I'm willing to take on a trade, and then continue to ride the trend or the reversal.
Last question from me. Having a run in office and being with traders and observing their positions and stuff. I mean, what do you do, like, if people, like, risk parameters for you as a firm, like looking at, like, what if people just start buying Nvidia today? Just start buying it. Is the overall firm, I mean, is it regulated to each person? Because I can remember looking at some traders' positions and things going on, and I'm just like, oh my God, this is just going to be an absolute disaster. I mean, it's from how do you handle that from a risk management standpoint?
Yeah, definitely. That's the probably on our side. That's the most important and also the most difficult part to do. We have obviously the department guys that sit in every day and just watching the numbers, each trade, each account, each trader, each position, of course, and they really understand. And like you said, in real time, they need to understand what they do with it. We are using some AI solutions as well to help us monitor it, because there are like literally millions of orders every month. So in that case, it's not an easy task, but we are doing a few things. We have profiles. So for example, if you trade in penny stocks and you trade in 10,000 shares a trade and you go in all in, we put you in a profile level of risk or aggressive. And then we have the second profile will be, for example, tech companies trading 100 shares, taking a smaller risk, then we put you on that profile. Once we have that, we can adjust the risk literally in real time for each group, basically. But it's not an easy task, I gotta tell you.
All right, well, Michael, we love learning more about Trade the Pool and having you on the show. Always some great information. We do have the link in the description here for people that want to check it out. I will throw it in the chat as well. We also have the QR code on the screen that you can scan. Michael, I know it's I know it's a little bit of a different time for you halfway across the world, but I appreciate you coming on Pre-Market Prep. We'll let you get on with your day, and we'll catch up soon.
Thanks so much, guys. Good luck.
Thanks, Michael.
Appreciate it. All righty, guys, we've got about 9 more minutes left of the show. Joel, I'm going to pop your charts back on. Let's run.
Okay,
through,
we're just holding steady Eddie. One thing that I like to look at is like the print before the number, the close of the bracket, and that was 56.2675, and we're basically right there right now. We had a little bit of a pop, little bit of a retreat from that, but I think the market's still digesting the numbers after just some great pre-market after hours and pre-market action.
We talked a little bit about Nike a week or two ago, but let's talk about some other shoe companies here. Let's talk Birkenstock first. Then there's a couple more that I don't think we talked about on the other day, so we can do that after Birkenstock. But Birkenstock reported earnings. EPS came in at 53 cents, missed the 58-cent estimate. Sales came in at $608 million, missed the $631 million estimate. So pretty significant miss there on revenue. You're looking at $30 million miss for the company. And so the stock trading down now more than 10% for Birkenstock. What was this? The company's like 3rd or 4th earnings report as a publicly traded company?
Yeah, it hasn't been out there that long.
No, not at all.
Let's see. It went public October 2023.
A year ago.
So not even a full year yet. So
Not
3 or 4 earnings reports at most.
I mean, 50, $2. You're just like doing the math here. You're 30 times earnings here. It's not crazy. I love the shoes. I have 3 pairs of Birkenstocks actually.
Really?
I got the full like plastic, like so you can go in the water with them, and then I got the regular cork ones too. I love them. I mean, I wear them 8 months of the year, and that's that. And being up here in Georgian Bay, my toes are getting cold. So when you get to October, but that's how much I love the shoes. I love them. They mold to your feet. They're so comfortable. The one issue they're going to have is the shoes are very expensive. These are not cheap. These aren't like Crocs where you're going out and buying a pair for $40. The Birkenstocks are typically $150 to $250, to start. So they're very expensive. And I do think that's an issue here right now for them. Why they're missing earnings is that we are still in an economy that certain things are doing very well, but high price ticket items are not doing as well as they were before. And Birkenstock is unfortunately in that latter category.
I don't think they're comfortable. I've tried them on in the store, and I can't even get out of the store with them on. But
because they got to mold to your feet, so you got to get through that first. What happens is the cork actually, you get them on, and it's a little bit hard, but then it molds to your feet, and after a couple of weeks, it's just like molded to your feet, and it feels great. So you got to get through the little hurdle. Here I am. I'm a Birkenstock salesman for you. I love the shoes, but again, I don't know if I love the stock here.
Very important technically for this today to hold the low that you had. Let's call it the yen carry low. That came at 53.05. You did dip below it in the pre-market. You did get to 52 even. So just for the day, I don't know if we're going to test the pre-market low or whatever, but you want to hold above 53 here. If not, you start to get in this whole gappy area. And then coming back on the upside, you got a long ways to go to fill the to get to the bottom of yesterday's range at 60.66. So another one kind of no man's land trying to hold that gap, and the yen, the gap from the last earnings report, I assume, and then the low from the yen carry trade day. So a couple levels to look at.
And then I mentioned on as well. The stock was breaking out the other day. I had people in the chat mentioning it was making new highs. At least it's high since right after the IPO. I believe it got up to around $56. And then of course it sold off. You know, we've talked about that tendency of IPOs.
I think
to
that was
have
on
that.
the earnings.
Yeah,
when it
yeah.
got
So
bought.
so it got up to what, $50 here, or kind of hit some resistance maybe there at $50.
48.
The earnings came out on this was last Tuesday, or actually 2 weeks ago. The earnings, I think we talked about it when it actually came out, but I just wanted
I
to
think
bring it
it
back
dipped
up.
initially, AB, and then they bought it. So you love seeing that action when the stock initially has the dip, but then they turn around and start buying it, because again, you catch short-term traders leaning the wrong way. You catch, people who were bearish, pressing their bets and leaning the wrong way. So that's always the most bullish setups. Like when people always want to set up where you got a chart where stocks just, cup and handle or something. Actually breaking support and then getting back up over it is usually the best setup, because then you catch everybody trading the breakdown. You catch those short-term traders. So continues to obviously taking market share. It seems to be wanting to take, market share from Nike. You don't hear about it as much anymore. I said my buddy Jeff was over on a Mediterranean cruise that everybody's wearing on shoes. Everybody. Now, everybody isn't always everybody, but he says, I see them everywhere. Sometimes it's just boots on the ground. What are people wearing out there? What are they doing? Where are they going? That helps in investing.
And to your point, Dennis, about stock, getting bought back after the dip, especially, you can talk about it in a technical sense, but especially with the fundamentals, like after a earnings report, I like to see that, because a lot of times the instant reaction will oftentimes be an overreaction, and if it's to the downside. And then you have analysts. Look at Nvidia, for example. You had Nvidia's earnings come out. The stock went down. It was trading down 6-7% at one point. And then all the analysts come out and they're raising the price targets, because it takes some time to go through the actual earnings, see which segments of the business are growing, and things like that. And then a lot of times, like the earnings report, even if the top line numbers might not blow it out of the water, things that you look at are like, oh, this is actually pretty good. We talked about that with Dell's earnings too, because Dell stock went down after the earnings. Then you went through some of the data center stuff, and it's like, wait, this actually looks pretty good. And so, I like to see that after an earnings report. And it sometimes takes some time to really, digest it all and understand if it is it should be a bullish report or a bearish report for the company.
So another stock I had on my list to cover here, just moving on. It looks like it's game over for Big Lots.
Yeah, belly up.
Belly up. I don't know if it's officially been announced here, but I believe it was Wall Street Journal reporting it last night. They're considering.
Yeah, they're going to file for bankruptcy, or that's what the reports indicate.
Considering bankruptcy.
Yeah.
Yeah.
Great.
This is a story that's just gone bad and gone south over the last few years. And, a stock that was very much a darling, in 2018, 2019, and even obviously came back during the pandemic from 2020 to 2021, when the stock rallied from 14 to 60. What I've said, and I used to shop at these stores, obviously lived in Windsor for a long time, across the border. I used to go in these Big Lots, and I'd go in there looking for the deal, and the stores were a little bit scuzzy, but I kind of liked that. They cleaned up the stores and they lost their way. They were like kind of selling some a little bit, not never higher end, but higher than it was, like stuff falling off a skid. Didn't seem like the deals were there anymore. They were about the wholesale store, like going in and getting the great deals. And I'd go in there, I was like, there's no deals here anymore. And I stopped shopping there probably about 2020, 2021, because I was like, I don't feel like the deals are there anymore. And sometimes this boots on the ground tells you. And obviously consumer has said the same thing. And, here you are at stock $60 to 60 cents. Sometimes just going in the store, sometimes you're an investor, just going in the stores and feeling out your own personal experience, if you can do that, is sometimes the best way.
Yeah, where was I? Oh my God, I was thinking about you, Dennis, because we talked about, going out to different places and judging the inflation or not. And I went to this bar around here in Detroit area, a little bit out in the suburbs, but there was zero inflation there. They had a thing on the menu. They had like different deals every day, but they had a thing on there. 22-ounce Coors or Blue Lights were $2.50. And I was like, I asked the waitress, I was like, is this like part of a deal or something? She's like, no, that's just all day, every day. $2.50 for a 22-ounce beer. I was like,
where was that at?
This was at in Clawson at Renshaw's.
Oh, okay.
Have you ever been
I
there?
want to go to $2.50 22-ounce beer places. Blue
Renshaw.
too. I'd stay away from the Coors Light, but the Blue Light's pretty good beer.
Renshaw Lounge. Yeah, great place.
Wow.
We could play some pool there too. All right. Well, that brings us to 9 a.m. Sorry about the little tangent there at the end. But 9 a.m. Joel, who do we got coming on with us tomorrow?
Tim Quass is going to come
Oh.
on. Yeah.
Great.
Wrap up
Miss
the
Tim.
month. Little bit of market structure here. Last trading day of the month before we head into the Labor Day weekend. Keep an eye on that too, folks. With the markets being closed on Monday, if you're chomping on the weeklies for next week, you're only going to lose a day of premium there. But yeah, we'll bring in the Quasinator here to take a look at the markets for us.
Dell getting hit here. The chat wanted to quickly sneak in Dell. There was a headline here, AB. Do you have it in front of you?
The Dell headline was that they are there's a delay with some of their data center. Let me get the exact
Including
headline.
Blackwell.
Yeah, so it was
AI server builds for
AI
20.
server. Yep, you got it.
Yeah, you got it.
Okay,
Go ahead.
Dell's AI server builds for 24 slashed amid shipment delays, including Blackwell. That's from Nvidia. That was from Morgan Stanley. So the stock got hammered this morning. It actually is coming back a little bit because it got down to around 105 flat, and then is now back up to around 107. So a couple bucks here on the dip getting bought, but still down more than 4%, about $4.50 here this morning on Dell.
Hey, Dennis, you going to be around to do the closing print today at
I will.
3:30? We'll wrap up today's action at 3:30. The closing print.
I'm also helping out with the Wolf podcast here today. So I get around there a little bit there at 3:00. So if you're interested, I'm going to go back to back with Wolf at 3 and with Joel on the closing print at 3:30. So lots of market analysis.
A lot of triple D coming to you. All right, that's great. Let's keep an eye on that. We're stuck. The street's still undecided on those numbers. Nvidia trying to get green, pre-market high. I don't have anything for you there, folks, but we'll see. Always want to see on a day like this, things to go, continuation through the pre-market high, perhaps up to that double top. But great job, fun show. Would even get to cover Best Buy or
CRM. I mean, so many big names.
Holy mackerel.
Yeah, we missed a lot of them.
Too many tangents. All right, everybody, have a good day.
All right, we will see you guys tomorrow morning. Tim Quass, Market Structure Monday on a Friday. Looking forward to it. We'll see you guys there.